It's the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily technical analysis stock market show, where we look at what happened in the market during the day and how we can plan for a better trade for the next day. So we had a market that was doing nothing much, flat today, right? Market tried to gap up and then faced resistance, and we have a weekly expiry that's coming tomorrow. So will it retain this momentum that they had gained yesterday is the question that's with everyone. Let's analyze, see the charts, and then discuss about that. So May 19th, Thursday, tomorrow expiry date 2022. So that's what the pre-market analysis we are going to do. And it will be based on all these parameters that you see there. We'll also have some rapid and actionables as well. So look at this candle. So it gapped up and it was this candle is actually a trap. It's a bull trap. So the bulls went long thinking that the rally is going to continue, but it trapped all the bulls, faced resistance, and then fell down. Same with Banknifty bull trap, where it went and closed below the previous day's high. Right, so clear bull trap is what you see, and that's after a big 410 points of up move that happened yesterday in the market. Right, 700 points in the Banknifty. So it was a big move, and obviously after a big move, market does not continuously make big moves unless there is a big event that supports that. So here there is a normal buying from the dip set but have happened, and it is probably people are getting out who are want to book profits, right? And that could be the thing, because it closed below the previous day's high. Both of the indices closes below previous day's high and previous day's close as well, right? So it was a flat day, right? 19 points already lost. 138 points is nothing in Banknifty. 0.4 and 1. So 0.10% and 0.40% is what the moves that happened. Nothing much happened. A big up move happened and it could not sustain, face resistance and fall down. That's exactly what happened. We know that it's a trend. It's a bearish downtrending channel. Falling. That's what is happening, right? You can clearly see. We are within a back channel from where we had broken out, and then trying to bounce up midway of that, right? Never know whether we are going to be able to do that, or would we fall back to where we came from, right? You never know. It could make a new swing low. Both indices, it's possible, because it's very close to the previous swing low, and that's where the reversal happened. So it can again fall back and break this previous swing low. Same with Banknifty also. Previous swing low can be broken and it can fall down back to the channel from channel bottom. So all that is possible. Then it can bounce up, and all these things can happen. We don't roll out, but we had a very hopeful big bounce move that happened, which could not sustain and trap some of the bulls before an expiry tomorrow. That's what has happened. Intraday price action, you can see that yesterday we had a very big bull move, and then today it continued that and could not sustain, and then attempted to stay there for some time, but big sell-off happened and it trended down, right? So 1.5% down, and nearly that much of down move also happened today. See, it's intraday price action. Bollinger Band is nothing to say about that. It is clearly saying bearishness, right? But it's outside the walking of the bands on the downside. Volatility expansion is clearly visible. Volatility would be there because the distance from the medium and the price is too far. So that's it. Both indices gapped up and could not sustain and then fall down. So that's a price action. Support resistance levels, nothing much has changed. The support would be 16,200 and downside. If that breaks, then 15,850, 15,950, which is 961. That breaks 15,500, 15,650. That breaks 15,350 and 15,450. Right. That also breaks, then we come back to 15,000 kind of levels. Right. So where is the resistance upside? We have a resistance 16,350 to 16,450, which are from 50. Above that you have a gap resistance, which is 16,550 and 16,450, 650. Then 16,700, 750 will be clear of the gap resistance. Above that you have 16,900, Fibonacci 38 retracement, and then 17,000 dotting numbers. So that's the immediate resistance up and support on the Nifty. And right side Banknifty, you can see that 33,800, 34,100, Fibonacci 61 would be the first support downside. That breaks the code 32,000, which is where if that also breaks, then 32,400, 32,800 is where the first support would be. Then after that you have 31,800 to 32,000, 100 level. So that's the previous swing low. So that breaks, then you come back to the 3500, 31,000 level in the Bank Nifty. Similarly, resistance on the upside would be 34,350, 34,750 first, and then we have a gap resistance which is coming close to 35,000, 35,300 level. Then you have 35,600, 35,900, then 36, 300, 800 Fibonacci 38, and then you have another resistance that's coming at that is ending at 35,500 level for match 23. So that's the upward resistance and downside support. So Bank Nifty making out of these levels. So as I say, the crucial levels to see is this arrow pointed places of 15,650 levels breaching, and similarly 31,100 level breaching, right? That's what I do. Similarly in the upside 17,500 and then 37,500 is what you have to look out for. Nothing much has happened from yesterday to today except that it just tried to trap the bulls. Right? So momentum managed to be there in the sideways zones on both indices. You can see that there is a range shift of the momentum that's happening, which is very positive. Basically, the momentum shifted from the bearishness and kind of settled at the RSI 40 before it can bounce up again. So this is known as a range shift concept in the technical analysis. So that's making it a little bit hopeful for a further up move is what at least a sideways movement or a sideways momentum can be possible. So the same that's happening on both indices on the short term, medium term also it's sideways. So already momentum has turned sideways, but the thing is trend ADX indicator is saying that it is still in the bearish zones with a small bend that is taking place in the last 2 days. This bend in the strength of the bearish indicate that probably that there is going to be a crossover to the bullish zones. That's possible, and the bend can be seen on the green line, which is the ADX strength indicator, strength, and it's DMI negative. So as of now it's bearish, but that bearishness probably may be ending is what the ADX a direction movement indicator is showing. So trend nothing. It has not crossed over to bullish zones yet on both medium term and short term, daily and weekly. Nothing has happened, but momentum has turned sideways. Trend takes time to change. VIX has cooled off a little more, 2% down, further to 22.29 still. 21.38 is the implied volatility, and IVP it's percentile, implied volatility percentile of Nifty is 85, cooled off from the 90 of yesterday. Still about monitor, you have to be cautious, and anytime it can spike further up to higher levels, and the choppiness in intraday reverses all that is possible at this level is about 20. Open interest analysis into what is an expiry. This is a weekly expiry analysis of the charts of the options that you're seeing at May 19, 2022 data. Look at the range. It has narrowed down to 16,000 and 16,500 the highest number of put and call rating, 15,500 and 16,600 for the highest. Second highest put and call rating where the support resistance can be seen. Put call ratio is very bullish today. It is cooled off now to 0.74, right? And long unwinding is bearish definitely. People who thought will go long yesterday now are covering their positions. Unwinding their positions basically, right? So long unwinding is there in the futures also. 0.81 is very closer to bullishness, but still not there, about 1. So put call ratio is kind of closer to bullishness, you can say, but not bullish enough. 33,000 and 34,000 is the highest put and call rating in the Bank Nifty that is seen as of now for this expiry. 34,000 and 35,000 is the second highest put and call rating is where it's seen. So we have a lot of additional call rating that has happened today. Some put unwinding also has happened on the OTM levels. You can see that on the Nifty. So overall, Bank Nifty shows little more strength, but yeah. So that's what open interest is giving an indication that probably 16,000 may hold good for tomorrow's expiry, at least. And put call ratio is closer to bullishness, right? But there is futures OI showing that there is some unwinding of the long unwinding, which is kind of bearish. That is a slightly bearish indication that it gives, right? So making note of this 33,000 and 16,000, which may be holding, and similarly 16,500 and 34,500 for the Nifty and Bank Nifty, right? So heat map is showing that Reliance did well, some banks did well, but most of them ended up IT did not end up green, but and did not end up red as well. So what ended up red was not heavyweight stocks at least. So the sectors that did what was IT, overall, FMCG and automobile and chemicals. So financials, the major sector, did not do well even, right? So that's what I understand from sectoral analysis. So index average HDFC trying to hold on the sideways momentum, trying to clear that resistance from where it had slipped down earlier. The twin is also doing that. It's already in the sideways momentum. So that is struggle to hang on is what you see in the twins. And Reliance Successfully climbed into the sideways momentum after having slipped, and then seems to have been making a good bounce. But today is a red day for Reliance as well. Nifty, although the ID stocks did well, it could not do move much and climb with the momentum in the sideways. That did not happen for the Nifty today. Same with TCS also, but it has moved into the sideways momentum. But overall, not a big up move could not be seen in the TCS yet. Momentum is sideways anyway. So ICICI Bank also red day, could not move further up, but the thing is it has regained the momentum sideways on the short term. That is a good thing. Yeah, HDFC, Kotak Mahindra is a bank that was showing green when all the banks were going down. And today it seems to be not have done that great, but it is just trying to be getting into the above 60 RSI bullish zones. Remember, it has a very good support on the downside, and a middle ways resistance is clear. Now next target is already clear on the picture at the levels for that. Right? To keep a close watch, but basically it's consolidating on the short term and medium term is what you understand from the charts. Sectoral performance, if you see IT, so almost all except for pharma and FMCG, all the other sectors were actually down or flat. No, less than 0.5% of down. No, is what happened. But what was really flat, you cannot say it's down. So the only three sectors which is maintaining short-term sideways is auto sector, pharma sector, and FMCG sector. So other sectors are all still bearish on even in the short term. So you just have to wait for the moment to catch before we can find which is the strongest sector and then pick the stock from there. That approach, you have to wait for some more time until some bullishness is seen. As of now, it's sideways all over. Institutional participation yesterday also we had seen that there was big selling by the FI that continues even now. Similarity as also is. So who caused the bull trap? It's not clear because today's data has not come in. Once that comes in, mostly it might be that the DAs might not have bought enough of, and the FIs as usual might have sold. Right. We'll have to check that later. But this continuous FI selling is a concern that has to be registered. Now, currency, if you see, there is some cool off has happened in the rupee yesterday, but today it seems to be climbing back about there. 77.5 is what you see here. There is some kind of divergence, so there is every chance that it's not going to cool off that you see USD INR we are talking about. Remember, it had already kissed the all-time high levels of 78 nearby levels, and then now there is a divergence also seems to indicate the price can again shoot back up. Currency index used dollar currency index also was spiking up. It had cooled off for 3-4 days after making a 5 or 6 year high, probably more than that, right? And then some cool off had happened, but today it seems to be at a resistance zone and consolidating around that area, and it seems to be further strengthening and then getting back the momentum into the bullish zones is what it looks like. So there is every chance that the dollar can further strengthen, dollar index basically. And the USD currency pair had made a 17-year high or something, right? So currency is in bad shape. Rupee is weakened to the core. Not good for the economy. We look at the global indices. It is showing a very good recovery in the last several days. And Dow Jones at least, right? Major support zone. It has taken a support there and bounced up quickly, and then the next thing is would it climb back into the support zone, major support zone from where it had slipped down for the second time the last few months. So S&P 500 also seems to be trying to reclaim the resistance from where it had fallen out. Both of them have managed to climb back the momentum into the sideways. Same with Nasdaq also, S&P 500 also. S&P 500 is downside here. You can see that is also climbed successfully into the sideways zone. So the pullback to reclaim the support levels is what we can see. So trying to bounce back, and so that indicates that probably this is not a big crash that's going to happen. Right? It had slipped. It was bearish when the inflation went high. So now things may be getting back to control slowly. So it may be getting back into the sideways momentum rather than a bearish crackdown that is unlikely to happen, is what the charts as of now indicates. Gold, it's again going up and maintaining its level above 110. It's not good. Momentum is rising up, and it's not showing any willingness to fall down below the 100, right, since very long time. Gold, as we said, no, it could not sustain, or when the dollar index is shooting up and inflation, Fed interest rate hikes are happening, gold does not seems to be a very attractive enough as of now in the short term, so it has dipped and remained in the various zones as of now. But the support from where the major support level is what we see where it had bounced up the other day, and that seems to be a very good support, although it had slipped off from the support on the upside. So momentum is gone from sideways to bearishness is the concern. So it might we'll have to keep a watch when it climbs back to sideways at least before we turn bullish on the gold again. So two stock picks, Apollo Hospital short. The weekly charts is what we see, and the entry is for the swing trade, 1 or 2 days trade. So it has to be taken on a daily or a lower time frames. ITC is a bullish call on the long side. It has got a momentum reverse resistance on the weekly, so there is every chance that it can go up above 300 is what I see. Right? But it can be a positional or a swing of 3-4 days also. That is, it moves very slowly normally. But yeah, it's a heavyweight. And, so there is every chance that it can move further up. It's showing very good momentum, very good trend, very good price pattern in the channel, and seems to have consolidated. It can clearly give a big breakout to this 300 levels for sure. Apollo Hospital is showing a bearish down move. It is a weekly head and shoulder pattern that has given up the neckline, and then we can give 2-3 days of swing. Clearly the bearishness is there in the medium term also, and the momentum also, and short term also it's bearish, so we can give short trades. Probably it is a little overvalued when the rally happens, so it may be correcting, that may be correction much correction left on this stock. So it's a short trade. Apollo Hospital, ITC long trade. Wrap up is basically yesterday's the market view remains the same for tomorrow also. Mild bearishness is what that's as per what the chart patterns and the support resistance side with momentum, bearish trend, and Bollinger Bands breakdown. All of this indicates that it's slightly bearish. Not it may turn out to be moderate or higher bearishness. Can happen at the same time. It can regain the strength and then move further up. Right, but as of now, the charts are showing that it is bearish. It could fall down and make another swing, as I said earlier in the beginning. Another swing low is possible, right? It could break the support zones where it at least tested second time, and all that can happen. But right, we there is no way to predict the markets. Right? We can only look at the probabilities. Right? We are studying the probabilities, that's all, and manage the risk basically. So it's a crucial support zone. We already know that it has not given up that. Today it was a bull trap, but hold this. Will this expiry maintain 16,000 is something that is key. But a lot of bad news is around the market. The RBI inflation, Indian inflation, US market inflation are a federal hike in both the global markets and Indian markets. Fyers aggressively selling crude going high, with rupee making 17-year high, means low level, and all the global clues on the war and all this Russian war, all everything is still in there. That's why you see the VIX is not cooling off below 20. Even if it cools off, it climbs back to 21 above. Right now it's about 22, so you have to be cautious. But positivity is there. Probably this is not a bear market, and this is just a normal correction that may be. Remember, we have made already around 15% of correction. So maximum 5% more of correction may be happening, not more than that, unless there is a big trigger behind that, like Lehman crisis or something like that. It is not, or a corona attack or nothing. So that sort seems to be there as of now. So correction may be over, or further it may correct another 5%. Right? That's what the view has to be. Because there is a lot of confidence in the retailers in the market, and then dips are getting bought even if the correction goes little extra on the downside. Right? So if I continuation selling volatility, it's still being the market. A lot of global cues are negative at this moment. We have to be cautious. Making out of the levels on the upside, 17,500 and repeating 37,500 on the Nifty and the Banknifty, 15,450 and 30,450 on the downside. So we have to keep a close watch. You also have a 15,650 in between where the swing low is there, and a 32,000 level where the swing low of the Banknifty is there. That's also interim levels that you have to keep a close watch and take your decisions accordingly. So Always cut short your positions when the VIX is high. I use hedge positions for overnight because it could wipe out your capital if your view goes wrong. So have typed stop losses in the intraday, right? Because V-shaped reversals are there. Stay out of the market if you're not a professional trader as such, right? It's mild bearishness. Yeah. Also, there's an option to buy SIP mode investments. Long-term good quality stocks can be bought in small chunks because we get them still cheap because the correction is still seems to be in the probability market is at the bottom level, kind of. We don't know whether it's bottom or not, but at least it's in the you get good quality stocks at lower prices, many of them. So don't pick all of them one shot, but probably few stocks at a time, small chunks of SIP model, systematic investment. This may be the time, and hedge your long-term investments with option strategies or gold or other methods, right? If they are good quality stocks, right? Retain them with the strategies that can give you hedge benefits, right? So that's my view. The mild bearishness continues to be there, and if that helps you to frame your own view for the next day, consider hitting the like button. If you don't subscribe, please subscribe. We have very few subscriptions and appreciate your help in this regard. Thanks for watching. Happy trading, happy learning. Bye.